This is a panel for U.S. tax directors with Mexican operations, so U.S. companies with operations in Mexico, the companion to the panel on Mexican companies with U.S. operations. And so we've got a great cross-section of tax directors with a lot of experience. I'm going to let them introduce themselves. But we're going to walk through just a number of issues, just more of a roundtable discussion. We don't have slides, just a roundtable discussion on particular hot button issues impacting U.S. companies with Mexican operations. I don't think the press is here. I mean, there is press here, but I don't know if they're here. But in any event, if any of the 6 of you are from the press, this is all off the record, totally off the record, not background, not nothing. This is totally off the record. It's a challenge we're lucky to have companies represented here. It's a challenge to get companies come and talk about issues because they're obviously talking about issues that they're dealing with, and that means that you know the issues that are impacting these companies. And so we're grateful that companies are willing to participate and share their war stories, but again, it's all off the record. So with that disclaimer, we'll just go down the row here. Jay, why don't you start? Tell us who you are and a little bit about your company.
Okay, so my name is Jay Ramirez. I'm the head of international tax at Gilead Sciences. Gilead Sciences is a developer, manufacturer, and distributor of its own medications. We specialize in virology, including we released a drug for the treatment of COVID. We also do oncology cancer treatments. In Mexico, we have a limited risk distributor. We've been a limited risk distributor since 2019. Before that, we were a marketing subsidiary.
My name's Nancy Loeb. I started as a member of the press at Tax Analyst, Tax Notes International many years ago. Worked for Mike at the beginning of my career, KPMG National Office and EY National Office, and including in Amsterdam. And then was with GE for 15 plus years, GE Capital, where we, among many things that we did in Mexico, we owned transmission lines, we owned power generating assets, both traditional and green energy assets. And that was very, very interesting over the life cycle of those deals. And then I moved to a company called Brunswick, which is a recreation company, and we had multiple maquiladoras in Mexico in addition to distributing in Mexico. And so lots of interesting issues associated with acquisitions of multiple maquiladoras, et cetera.
Is that a Brunswick boat going by there? It's an aircraft. You can't see it. There's an aircraft carrier going by.
If it's beautiful, it's a Brunswick boat.
Hello, my name is Jorge Ibanez. I'm from Mexico City, Monterrey, sorry, and I work for a wonderful company. They are they are owner of the Fiji water. They have the citrus company, lemons, limes, all the pomegranates juice, and in Mexico has the citrus and the pistachios.
And he said he works for, the company is the Wonderful Company. He works for a wonderful company, but it's called the Wonderful Company. Just to clarify for the translators in the back.
Yeah, and it's wonderful to work there.
Hi, Federico Latorre from Sempra. Sempra is an infrastructure company. It's here in San Diego. It's the company that owns San Diego Gas and Electric, SoCal, and Northern California, and Encore in Texas, and in Mexico, there's about 90 companies. The company started investing in Mexico about 1998. It's starting with a pipeline. It was about a $20 million investment, and now it has over $10 billion in Mexico.
Great. So why don't we just start with transfer pricing? and some of the challenges associated with transfer pricing. 'Cause Jay, you said you were full risk and then went to LRD.
Sorry, we were a marketing subsidiary.
Okay.
That went to limited risk distributor. And to date, honestly, given the size of our operation, we haven't had too many issues with transfer pricing. We've got, at this point, no audit history, which is very good, and we've had no issues, other than meeting with our stat auditors and making sure that our returns are in line.
But were you saying, I know you said you haven't had any issues, but, I mean, what are some of the challenges that you deal with, though, in terms of, did we talk about, was it with you that we talked about, sort of year-end adjustments?
Yeah, I think one of them is that's a good point. The challenge of moving from a marketing subsidiary to a limited risk distributor. There are different metrics for computing the employee profit share from being a marketing subsidiary to being a limited risk distributor. So there were some challenges there, which ultimately we used a blended metric at one point, which was a little difficult because it ended up giving a kind of a skewed result. And so now what we've done is we've gone to a calculation for a limited risk distributor based on full profit share.
And are you trying to, what do you do with, with adjustments after the close of the year? Do you have adjustments after the close of the year? I'm sure you do.
Well, we do have adjustments after the close of the year. However, it's really based off of our stat accounts.
Okay.
And our stat accounts are generated plenty of time after the close of the year, so we're able to get everything in at that point.
Okay.
So that works out pretty well.
Any other transfer pricing observations?
Not really. I mean, our company, most of the businesses are regulated, so really there shouldn't be any transfer pricing issues. Some of the issues that I see is that obviously Mexico, they open up with the energy reform, they open up an energy business recently, so maybe lack of experience on the energy front from the auditors, like having to walk them through the business. But other than that, no major issues.
I'm in charge of the part of Mexico to perform the transfer pricing. And the biggest change in 2022 was the new reform. We have to fulfill the local file the May 15. And for example, the master file is performing here in the United States. The big challenge is because in the local file, we need information for the master file, but the master file is due at the December 31. So we have 6 months, 7 months of difference. So the big challenge for the local file is to ask information that the American companies is performing during November and December. So this is the difficult part that we have this year, but we have to put a note in the local file to the tax authorities, say, hey, the master file is performing in December, November, so we don't have this kind of information until October or November.
And
So-
it's probably too early for that to have been,
Exactly. Yeah, and because was the first year, this year, so maybe in 2023, maybe the tax authority is gonna do something about that.
and are you using is your auditor doing is your audit firm doing the local file?
Yes.
Okay, so so you don't have issues that might arise when somebody other than your audit firm is doing the local file and there's questions about what might go in the report and
Yeah.
whether you need to reserve or anything like that.
Exactly.
Okay.
I think for Brunswick, we had multiple operations in Mexico that were acquired in different acquisitions over the years. And so each acquisition brings its own history and methodology. And developing a cohesive narrative that explained those differences in a way that we could justify was very important and often difficult. And so there were different ways of doing business, if you will. And we had challenges as well in some of the businesses related to the purchase of goods that were denominated in the agreements in USD. And so that would impact our margin when there were FX changes that we couldn't obviously control. or anticipate. And so we were constantly trying to make adjustments and to adjust our uplifts and make sure that, you know, we were staying within the spirit of what we had agreed, essentially. And so, always very challenging.
And that, actually, that's a good segue into just foreign exchange challenges. I know a few of you have issues with just dealing with foreign exchange, you know, in particular transactions, or does anybody want to comment on from a FX standpoint?
Yes, on the FX side for us, I mean, we're a large infrastructure company. We are heavily levered. So if you can imagine, like for instance, we can have a project that's going to take 4 years to build, and it's in the multi-billion dollar. And so, for instance, in my experience, there was one company that took 4 years to build, and in the third year, even though we hadn't generated any income, I had to explain to the CFO that we were going to pay taxes, and it was related to foreign exchange gains and inflation gains. So that was a big surprise at my early stages of my career. And then from that point on, I mean, it's been a topic, obviously. I mean, like I said, Sempra has about $10 billion invested in Mexico. With that investment, you can just imagine the currency swings and how those affect your well, they used to affect our financial statements. And so, like I said, it's just keeping them informed, the CFO and everything, and trying to, there's really nothing you can do. There's no planning around it.
I think one of the points that you made, maybe on the pre-call that we had, was that some jurisdictions allow you to keep your books in essentially a non-functional currency to prevent these types of things, right?
Yes, in our experience, I mean, Sempra had investments in Chile and Peru until about 4 years ago, and it was a big surprise to me. I had not dealt with Chile before, so when I was traveling to Chile to get to know the investment and those things, I found out that Chile actually allows taxpayers to elect to pay their taxes and keep their books in US dollars. This way avoiding currency fluctuations on not only on the financial statements, but economically. You don't have to pay FX gains and losses. And that's something that I've actually seen publications in Mexico from different firms and from associations trying to explain this to the government as a means to help the company attract foreign investments. But also, if you think about it, I mean, like I mentioned, some of our companies, it's almost like an annuity. We're almost like a big warehouse, right? We basically sell capacity in a big plant, and we collect almost like a rental income. So I've explained to the tax authorities, imagine there could be, I can almost guarantee you a tax payment of 30% over 20 years, and this amount of money over 20 years. The only reason why we're not going to be paying that amount of money over 20 years, it's related to foreign exchange and inflation. So it's good for the country to do this, to make the changes to the law and allow taxpayers, especially Mexico, which one of the biggest investors is the United States, to allow taxpayers to elect to pay their taxes and keep their books in US dollars, and this way avoiding, like I said, on the financial statements, and also trying to maintain consistency on the tax payments. So you can plan. It's very hard to do an analysis on an investment ignoring FX and inflation, because it will change. And I've seen banks, some of the banks, when we do project finance, they look at the investment and they're like, please ignore FX and inflation or add them, but there's no consistency for project finance.
I would imagine for a government, it's beneficial to be able to go in US dollars. You get a consistent return as far as your taxes coming in, if
Exactly.
you're willing to go in dollars.
Because I think both of us are looking, again, our company's looking for stability, right? Being ways to plan around a big project. And the country's also looking at ways to budget on tax collections. And I remember I think it was 6 or 7 years ago on a big newspaper, how much Mexico had lost because there was a huge devaluation in the last month of the year. And Mexico had collected that year almost, I can't remember what were the tax collections, but they had lost almost 40 of the planned collection for that year just because of the huge devaluation. So it would, like you're saying, Jay, it would be beneficial for the country and for companies and for the citizens also, because you have to pay hedges if you want to control, and those costs eventually get to the users of the services, right? So you would also help the citizens of the country by reducing the costs. So definitely something to think about for the country.
Great. Let's turn to, well, since you've mentioned that, let's just talk about just general experiences with the Mexican tax authorities. Challenges, war stories, things that, nuances in terms of issues that you've dealt with, that you're willing to share. I know you're willing to share stuff because you shared it before, so.
We were on the private phone. I don't know, that's good. I guess one of the things that recently has made me think about our document retention policy is experiences related to capital contributions.
Right.
I mentioned that I knew that the capital contribution, we would have to show that's part of your basis, right? So we were keeping like the notary documents where we would document a capital contribution. But then on the most recent audit experiences, we are being asked for bank statements for things that happened in 1998 or 1999. And you can just imagine, Michael, on the document retention policy. I mean, having to go and ask people like, hey, we need the bank statements. It's impossible. So we are reevaluating all our document retention policy, not just because of the capital contribution example, but recently we were that plus the CUFIN account, which is your previously taxed earnings. So like I said, we're reevaluating our document retention policy and educating the company.
And I remember when we talked about this, so this is proving out basis, even though you haven't had a transaction yet for which you would need to establish basis. Why would this even be, why would the Mexican Tax Authority waste resources trying to test that now?
Like I mentioned on our call, I could understand when we've done tax-free capital redemptions, because
Right.
there is, if for some reason we cannot prove out that those were capital contributions,
Right.
and we made a capital redemption, then it gets it could be recharacterized as a dividend.
Right, so this is KUKA. This is
Yeah, the
proving.
KUKA
Can
and
you
the
just
CUFIN.
quickly explain KUKA to the audience? Can you
KUKA?
just, yeah,
So Mexico basically has two primary accounts. The KUKA account, which is similar to the partner's capital account, which is basically, it tracks all your capital contributions and adjusts them for inflation. That's KUKA. And CUFIN is basically your retained earnings that have previously paid taxes. So you have KUKA and CUFIN. So when you make a capital redemption, basically the law tells you to do some tests to determine if that capital redemption is tax-free or can be recharacterized as a dividend. So going back to the experiences with the auditors, the most recent audit experience, what is interesting is on some of the companies where they're asking us for this information, we haven't made capital redemptions.
Right.
So really what you're looking at is changing a little square on our return where we're gonna take our balance from X amount of dollars to another, but there's not gonna be any tax collection. So to answer your question, I don't understand what's the driver for that. I still haven't figured it out, where I do understand why they do it on the capital redemption side.
yeah, it's interesting because we see on the US side, you'll see the IRS have certain campaigns. things that they are doing. And so there have probably been other taxpayers that, you know, there were issues with a redemption and whether it was tax-free, non-tax-free. So, you know, then it creates a campaign. All right, let's make everybody prove their KUKA and KUFIN accounts. Even though it's not necessarily relevant, but let's just make them do it. And it's not dissimilar to the IRS where they're spending time and resources on something that is totally irrelevant. And the only thing that's happening is you guys are spending time and resources to do that. But you can't tell them this is irrelevant. You know, why are you spending time on this? And in fact, you almost rather them spend time on this because then they're not spending time on something else.
Completely agree, but unfortunately, I do agree that there's not gonna be any tax collection, but the time it takes the teams and the investment, like you're mentioning, it's time that we can be focused on more valuable activities for the company.
Right. Other observations on dealing with the,
I have a horror story for the tax authority. But it's not was in Wonderful Company, it was in another company. Back in 2014, let's say company one in Mexico buy a lot of machinery to an intercompany in the United States. So they buy the machinery, they had all the documents legally, all the custom, they pay withholding tax, and the company one in Mexico start using the machine. So 6 months later, the company one sells that machinery to the company two in Mexico, intercompany two, because the company two is at that time was starting up, so they need that machinery. So the company one sells. Obviously, they have the VAT because now it's like in the Mexican, in territory Mexican, and all the valuation because all the transfer pricing between the company in the United States and the company one. So we have all the files in order. The company two asked for a refund for the VAT, and obviously the most important amount was for that machinery. So the SIT reviewed the company two and say, hey, where do you buy this? Okay, let's show me all the papers and that. And then for Art of Magic, the SIT comes with the company one for an audit because they need all the documentation for that machinery buy in the United States. So for that, I think it's gonna went like 2 years, and then the SIT, they can postpone like or stand by the audit for 1 year because they need to ask for information to the IRS for that company in the United States. So that year, the SIT asked for documentation to the IRS, and the IRS asked for documentation to the United States, the USA company. So that year was like an audit, the one that sells the machinery and the one that buys the machinery. And then after 3 years, the SIT says, no, I can refund that VAT. Why? So we have all the documentation necessary, but we have to hire a law firm. So we start a trial, a lawsuit, and blah, blah, blah. And at the end, the SIT, okay, you're right. And they have to pay to the company to the VAT, but plus interest, plus inflation. And for that, since day one that they sell the machinery, passed like a 6 year. Yeah.
interesting.
So it took you 6 years to recover that?
Yes.
Yeah. So on the VAT front, that's interesting. When we converted from a marketing subsidiary to a limited risk distributor, we became a VAT payer. our products or medicines are zero rated for VAT purposes, but we do pay input VAT. We pay our suppliers. And so we converted back in 2019. We are trying to get our first refund. So we're still working on the month of April 2019, and hopefully at some point we'll get the refund. I've been told by our service providers that once we get the first refund, all the other ones will come in real easy. But we're responding to a lot of question and answers with the tax authorities to get that first VAT refund out.
Yeah, I've often wondered just what percentage of the budgets of countries around the world are driven by time value of money on holding back VAT refunds. So any other VAT, because we were going to touch a little bit on VAT, any other VAT observations?
So we went in, I would say, we obviously did the same, it's essentially like construction. So this is just project finance, typical project finance. So we hired a service provider early, and we went in and we had discussions so that, because to your point, it's early and often. Because in the early years of the project, all you're doing is buying stuff and paying VAT, and it becomes really important to your cash flows. And so you have institutional investors and certain obligations, and you have certain projections that you need to keep to. And so it was very critical to us to essentially put a process around VAT and the VAT refunds, and we were very grateful that it worked out, but we were cognizant that there was, certainly risk.
Great. And and have you had, I'm asking a question that we didn't prepare for, but have you ever had situations where you're trying to claim a VAT refund and the SAT has come in and tried to impose income tax just because you've had a VAT, you've registered for VAT?
That's a great question.
No.
Yeah, we haven't had that happen.
Okay. And any observations on, we touched on this a little bit, on the Mexican GAR, the General Anti-Avoidance Rule. How has that impacted your planning, or has it been relevant to your planning?
I think I mentioned in my call that I haven't found experiences with advisors. So what I try to do is assume that it's going to be enforced and do everything following the GAR analysis you're required to, or supposed to be doing, and do it the best you can to, like
And
I
that was
said,
probably relevant to you, Jay, right, when you converted?
Yeah, well, I think the GAR law, the new law in Mexico, I think it's relatively new law in Mexico.
Oh, so it was after you guys converted?
Yeah, it was
Okay.
after we converted. But, just my basic observation, because I handle international tax, and that's not only limited to Mexico. In Europe, we also deal with Europe, and Europe has had GAR-like rules for quite some time. Auditors have come out and they've waived, GAR as a potential issue that they can come after us with, but generally they've relied on your more traditional transfer pricing analysis and different other laws as opposed to GAR. So far we haven't ever received a GAR assessment nor had a GAR settlement, and that's globally.
Yeah, it's interesting because it is more of a, in some respects, in countries that have that, it's more of a chilling effect.
Yep.
You might think about engaging in a transaction, but then you'll run it by your auditor, and your auditor will say, well, no, we don't think that, we're gonna make you reserve for the benefit. And actually, so maybe, and again, this is also unprepared, but any particular challenges in dealing with relations with auditors with respect to Mexican issues?
I think from our perspective, we kind of have a good relationship. The one thing is, it's actually, which is kind of funny, is sometimes the problem in the communication between the Spanish and English thing. Believe it or not, I've seen confusion sometimes on some of the transactions, misunderstanding on the facts, issues that were not issues, and then eventually you're able, and then the other part is, on the Mexican side, usually the tax people are not auditors or have a lot of experience with public companies. The
Right.
tax people, the ones that are technical in analyzing a transaction. So, and so they have, sometimes we start talking to them about FIN 48 or things like that. They may not know the reporting requirements, the gap requirements and all those things. So it's, you're trying to explain the issue and sometimes they don't understand why you're discussing it with them. But it's just a matter of discussing, like I said, explaining why you're explaining to them, what are the possible questions that they're gonna get from the US auditors, and preparing them so that when they have the conversation, like I said, they understand the facts, they understand why we're having the discussion, and what could trigger if there's a disagreement.
Yeah, because I've had experiences in Mexico and elsewhere where the local audit firm, the local firm, is often more conservative than the U.S. firm, and also often more conservative than that you would expect the tax authority to be. They're sort of acting as the first line of defense, first line of tax authority.
And in some ways, it makes sense, because there's several processes in Mexico that essentially rely on the audit firm's
Right.
analysis and position for a lot of different transactions. And so I guess I could imagine why that would be important. But just on the last topic, there was, over the years, as the tax laws changed in Mexico, when you're doing structured finance, those changes in tax law can change the result of the transaction, and sometimes you need to think about how to react to that change of law, and maybe restructure to optimize your tax result for your various different non-Mexican investors. And so those kinds of transactions, I've had interesting and difficult discussions, and mostly delegated those discussions to our tax advisors in Mexico, with a strong finance lead in Mexico because of the language issues and the cultural issues, in order to sort of smooth that road. But it's always been difficult. And I was trying to think of how those would have gone as I was reading about the GAR, and the GAR essentially being administratively enacted this year. And I think it gives them another tool.
Yep, absolutely.
Yeah, to complement, I have the same issues. Well, not issues, the same, like, I don't know how to say it, but at the end, the local auditors explain to the foreign auditors or the CEO, and they come to us. Hey, your local auditor tell me that it's true. Yeah, I don't know if the language or this matter of that most of the companies that are not in Mexico, they don't know 100% some laws, some income tax laws, some VAT laws. So they try to explain, and the other auditors try to make it logical, but in Mexico nothing is logical. So that's the difference.
Okay.
Yeah. I mean, for us, our dealings with the stat auditors have been two points of issue. One is that given that we are a relatively small operation, we went from being a marketing subsidiary, which was really just salespeople, to a limited risk distributor. We don't have a huge finance department in Mexico. So we outsource a lot of the bookkeeping, and then getting the firm that we outsource to communicate properly with the firm that's doing our stat audit can be challenging at times.
And it's interesting because you're a large company, Sempra is a large company. Do you think that changes your profile outside of Mexico, changes how you're viewed within Mexico by the tax authorities in Mexico? That they think that they're more aggressive because they think there is more there's more possibility of increasing tax in Mexico?
Yeah, I don't think that we've experienced that at this point, but I think it's very possible that at some point in the future we see that, just given the size of the company and given that we've had a short timeline as a limited risk distributor.
I didn't follow your question, sorry, Mike.
But do you think that, well, it's interesting, it's relevant for Jay, because very large, very profitable US company with an LRD in Mexico. And you see this around the world, where tax authorities, they're instantly suspicious of a structure. They see all the profit outside of Mexico or, the local country, and they say, we need more of that. We're going to look for any possible way to drag more profit into Mexico.
Well, first of all, until I think it was 2 or 3 years ago, the Mexican investment was a public company in Mexico.
Right.
So they had access to that information. But just to answer your question, I am dealing right now with the team in Mexico on a major audit, a big audit. And their presumption was exactly what you said, right? The profits are in the United States, and I had actually, we were discussing technical aspects of the audit, but then I decided, I did a couple of slides, right? And we're talking about 3 out of the 9 companies. Sorry, 3 out of the 90 companies. And it got me so frustrated with the comments that they were making on the company that I did the numbers, and I educated them that we were paying almost $500 million over the last 10 years. And I think their jaw dropped, really.
Right.
So they do sometimes act like that, but eventually it's just a matter of educating them again and just saying, no, we're not that type of company. This is how much we paid the country. We're partners with Mexico.
Right.
And our interest is to help develop infrastructure, help the country develop, and this is the amount of taxes that we're.
Yeah, and you're almost a utility in Mexico.
And we actually do have a couple of utilities. So, yes, some of them are, but like I said, there was that attitude from the auditor. It's just a matter of educating them.
Yeah, because you see this in Mexico and elsewhere, that there's just a natural suspicion.
Oh, yes.
And so the education process is helpful, and we sort of see that at the beginning of audits, like, all right, just like we did on our session, let's tell you about the company. This is our supply chain. This is how we operate. This is our profit profile.
And it's just not in Mexico, it's all Latin America.
Exactly.
Because when we were investing in Peru and the company decided to sell the asset, I think I mentioned this in our call, that the capital gains tax laws in Peru were not clear. And what I did was started having, and I had multiple trips to Peru, and I started educating them. But the tax authority, the SUNAT in Peru, the tax authority, initially, they looked at me like, nah, you guys are, you're just
You're
trying
cheating.
to pull up, you're gonna cheat, or
Right.
you're a big US company, you're gonna cheat. It took me, I think, 10 trips to convince them that, no, what I'm trying to do here is to meet with you, to agree on how we're gonna do the capital gains, because we wanna leave this country with our heads held high,
Yep.
and knowing that we pay the right amount of taxes. So it's all Latin America.
And you're right, and it's particularly challenging in countries where the tax capacity, the capacity of the local tax administration is not significant. And it's almost harder to administer, audits, et cetera, there, and it's harder to plan. We don't necessarily have that issue in Mexico. The Mexican tax authority is sophisticated. They're certainly more sophisticated. They're probably the most sophisticated, in Latin America. They're probably the most sophisticated tax authority in Latin America, and I would include Brazil around that. But in any event, in other countries, you don't have that. But that's all well and good until you get something like the GAR, where you get something new. And we're not going to talk about Pillar 1 and Pillar 2, but you think about how the Mexican tax authority will eventually have to prepare, when they do Pillar 2 legislation, how they will eventually, when they get to it, whether they're going to have the capability to enforce it.
So I think as you think about your narrative, right, and so that word is, it's just in the lexicon now of tax. But you need to think about what happened during COVID, you need to think about what happened during the Great Recession, and try to see it, in your spare time, whether you can sort of craft your narrative and show for your limited risk distributors, for example, hey, we either left a very small profit in these countries during that period, or if we had a loss, it was a very small loss of a short duration, and you compare that to some of the other data that you have in jurisdictions where the risk was housed. And that, to me, was always really helpful to try to substantiate the LRD arrangements, to show that we did take a lot of losses in the United States over multiple years. And so I think you're always going to have that issue, and you have these troughs. And then sometimes you'll be in the newspaper because this one product that you've rolled out is incredibly profitable, and now everybody knows so-and-so, has this incredibly profitable product, and of course your auditors are going to read about that, and so
Yep.
they're going to have a disbelief, right?
Well, I don't know, Michael, if you know that they publish the expected return per industry.
Right.
And so we were in a meeting recently, and they told me, this is the return that we would expect from you. And I was explaining to them, that's actually not our business. What you're describing there
Right.
is somebody that does this, and we're this type. And then discussions over control. I said, you have to adjust. You can't just assume that everybody that does that, without looking at their contracts, you need to look at the contracts, because
Right.
maybe you structured the business with risks in the United States or risks in Mexico, and then you would have to adjust the return. But this list that they have with the returns, I think that's gonna be a big challenge if they expect every company to make that. And
And actually, that's the future. Because that concept is, and we're not going to talk about the pillars, but that concept is embedded in Pillar 1. It's embedded in Pillar 2 with the substance-based carve-out, having some targeted return. And the only way that the OECD or countries are going to be able to police that is having targeted returns by industry. And early on in the development of Pillar 1 and Pillar 2, that was the direction they were going to go. Let's take this industry. If you're in this industry, you should have your sales function should earn this return. Explain to me why it's not.
exactly, but you're gonna be able to explain the contract and the nuances of the contract, and then adjust the return, right? Here, it's like, no, this has to be the return line.
Yeah.
Yeah, I think the distinction is like where you say, here's what a sales company should make in this industry versus I think the list is, here's the industry.
Right,
The
exactly.
fact that the fact that you're only doing the sales function is not our concern, it's the
Yep.
industry.
Yep. So Federico, in our prep call, you mentioned something that I never heard of, which is the border credit.
No, the barker.
Can you talk about the border credit and talk about your challenges with the border credit?
So the border credit is an incentive that the government decided to grant taxpayers that were doing business in the border zones, which it's defined under the law. It's under the decree, actually. And it's mostly the states that border the United States, so there were two decrees. The first one was, I think it was 19 and 20. And then there was an extension from 21 through 24, and the extension, I believe, started to do the southern border, because they wanted to develop those states. The northern border was to make the business competitive with the United States, because the law in the United States, the income tax in the United States is 21%. So what the border credit does is it grants you a 1/3 credit, which means a 10% reduction of the 30% Mexican corporate tax rate. So your rate is actually 20%. So it's, for us and some other companies that are doing business in the northern region, in the northern states, it's obviously a really good incentive. The first years we applied for the border credit, we were granted the border credit, but some of the companies, they were denied, and we just didn't understand why it was. So it's been a process to go through the courts or administrative appeals and things like that, but we're eventually getting it now. But
But you don't know why it was denied.
No, not really. I never understood why it was denied.
Other than it's like the time value of money on a VAT refund. We're gonna deny it and make you prove it out, and we're eventually gonna give it to you.
Exactly.
Okay? All right, let's finish up with ultimate beneficial owner reporting.
Yeah. So I guess I'll start off. We recently dealt with that with our stat audit, and
Can you give a quick primer?
sure, these are rules which require you to disclose shareholders over a certain percentage. And then if not, it can lead to officers or board members of the company as well. In our case, we're a public company. There are no, I think the percentage is greater than 15%. We don't have any shareholders at that level being a public company. But the concern for us is, of course, the board members and officers where they're asking for some, or they can ask for some very, very personal information in terms of name, social security number, spouse's name. I saw one that said the spouse's maiden name as well. So a lot of information that we're not ready to provide necessarily. We dealt with our auditor, our stat auditors are some of the main requesters of this information. And so what we did is we drafted a memo for them outlining that we are a public company and here's the nature of our ownership. And so that so far has proven to be sufficient. So at this point, we haven't had to deal with that. But I understand that these rules exist in other places as well.
But the issue is, so what you have to do is the company has to collect it, has to collect the information,
Yep.
hold on to it, and then if the tax authority asks for it, then you have to give it over.
Yep.
And so the challenge is for you is asking, your CEO, can you give me your wife's maiden name and social security number?
Exactly.
So that's a job, that's a career limiting move.
Career limiting move, and it's one of those things that if we are eventually going to submit that information, we need to go through that process well in advance with our legal department. It's not something that if someone asks us tomorrow, we can provide it tomorrow.
And what's the consequence, and we'll have the others comment on this, but what's the consequence if you don't have it?
Yeah, that, I'm not sure actually, what the full consequences of that, if we don't have it or don't
Because I
submit it.
thought there was a fine.
There's a lot of requirements that say that your accounting books and records have to be complete.
Right,
And so
I
without
thought
this
that's where- yeah.
information, they're not gonna be complete.
right, okay,
And
got
it
it.
has repercussions.
In Mexico,
But sorry,
No, go ahead.
Jay, were you talking about the auditor? We were talking about.
I'm talking about our stat auditor.
Okay, stat.
Okay, stat
No,
auditor,
no,
not.
I thought
not the
they were
government.
already, somebody from the side was
Yeah, no,
asking
no,
you.
not
Yeah, because I haven't heard experiences yet. I mean, this is relatively new.
Yep.
But I haven't heard experiences yet where it's been asked for by the tax authority?
Not yet.
I
Okay.
have.
But do you,
I got the answer for that.
What sense?
You're saying that your corporation, you cannot do it if you don't have that information. You cannot go through the process.
I'll repeat it for you guys.
Yeah.
So the comment was, when you're setting up a new corporation, you can't get the company formed, right, through the office that, you can't get the company formed unless you provide that information.
Yes, you cannot get tax ID if you don't do that.
Right, so for new companies, you're coming on stream, you're collecting that information.
in Mexico, we have that obligation is like a tax informative that we have to fulfill every year for the foreign shareholders for the company in Mexican. So that's because they don't have in Spanish the tax ID is RFC is like a tax ID. But as all the shareholders are in the United States, they need to know the name and the tax ID. So if we don't fill that tax informative, we are subject to audit and to some fines, but we have to obligation to do it.
So I know who your ultimate beneficial owners are. And And it's interesting because I know who Jay's CEO, et cetera, are. I know Jay would be concerned about asking for the wife's maiden name and social security number.
Very much so, yeah.
Asking your ultimate beneficial owner for that information, but you're saying you have it.
No, they only need the shareholders of the company in Mexico, for example.
All right, so you haven't gone all the way up?
No, no, no,
You're lucky.
no.
Knowing your ultimate
Yeah, no,
beneficial owners, you can all look that up, you can Google it, but that's fine. And how have you dealt with this, Federico?
The law department has the information. That's what I've
Okay.
been told.
Okay. Okay. And it's interesting, that's almost probably a good response for the statutory auditor, right? I am told that our law department has it. And hopefully that
You know what,
answers,
I haven't heard from the statutory auditor to ask us for the
Right.
information.
right.
But
But that is the issue, right? Because for them, they're certifying that the accounting books are complete and up to date, and they're certifying that.
Well, if you remember now, the dictamen fiscal is now obligatory now, and they are certified. now.
Right,
So
right.
I would assume that they did ask the question, and I assume that the law department showed them, here's my information.
Or you just said, yeah, the law department has it, and they,
Believe me, that's what that's what I know the answer was.
I-
The law
I- how does
the
the
law
ex-
department has it.
how does the phrase go? I am informed and believe, and thereon allege that the law department has it.
Exactly.
Yeah, I got to write that one down.
Okay, any other, we're sort of almost at the end of our time, any other observations?
So I'll just mention this really quickly. We had some interesting issues on our maquiladoras, which were in the northern part of the country, where a lot of the Mexican leadership ended up moving to the United States, and it created a lot of extra administrative work associated with their double taxation. And so ultimately, these are the types of issues where you need to make sure that you're in touch with HR, and it's a possible outsourcing issue, not to outsource the tax work to one of the accounting firms. But in addition, your local finance team needs to do some specific things in order to satisfy the Mexican tax obligations for these individuals, in addition to satisfying the U.S. obligations for these individuals. And so there's a lot of cross-border activity if you're maquiladoras in the northern part of the country that are fairly unique.
And you see that more broadly. I mean, in this day and age, you've got remote worker issues that are potentially creating PEs, potentially creating payroll tax obligations. We have clients that have put policies in place because they'll find out that somebody's been working, they have family in Mexico. They've been working in Mexico for the last 9 months and they haven't told anybody.
Right. And you-
Another thing that you have to
Yeah.
be careful is,
Yeah.
remember, if the administration of the company is by Mexicans, that is, you consider a resident of Mexico.
Exactly.
So you need to be careful because.
Absolutely.
Or a resident of the United States, which means that if for some reason you did something incorrectly, you may not get the benefits of the treaty
Right.
or things like that. So you need to be very careful with
Have a
that.
risk.
Yeah.
Yep. Yeah, and it's very common, if people are going back and forth to Mexico.
Yeah.
I'm just gonna go work in, I'm not going to the office. I can work in Cabo for 3 months.
Yeah.
I can live there, work there remotely, and it's cheaper than living in DC or LA. And why wouldn't I do that? And, the company then finds out a couple of months later, and you've created a PE, you've created payroll tax obligations. It's a significant issue.
Right, and you're first, as a tax professional, right, you want to say no. And so there's, you have to realize that the company and its employees, these are, a lot of times, they are very important individuals, and the company wants you to facilitate and support their personal choice, because there's more competition and there's perceived to be more latitude. And so how do you create that flexibility and mitigate the risks efficiently?
One final comment. This word that I just it's been a very interesting, I don't know how to translate it, but it's called materialidad.
Oh, yeah, we were going to ask about, we were-
That topic, I mean, for anybody that's doing business in Mexico, look it up, be careful with materialidad. Materialidad, it's basically, you need to have substance for any deduction that you have. And by substance, I mean, if somebody charged you for IT services, and it's an intercompany transaction, and it's $1 million, the tax authorities are gonna say, give me documentation to prove that you actually received that service, and what was it, to show me substance, that service was worth $1 million, that the service provider was technically knowledgeable to give you that advice. So that's something that I don't think a lot of people are paying attention
and
to.
it sits on top, it's sort of overarching to transfer pricing.
It's kind of tough, but it's more strictly indispensable and making it a deduction or not. And that is something that right now, I've gone on every single website, everything that I can look for, I can't find anything because nobody's gonna tell you this is what you must have. What I did too is go on YouTube and I saw some judges talk about what they would be expecting if you wanted to defend their position. And again, it's not a law, and there's no rules.
Right.
But you must maintain substance on every invoice that you receive from your intercompany and hopefully that substance is enough to justify the amount that's being collected from you. Be careful, this is under audit, they're asking for this information, and it's very hard to go back and go and get people to say, this is how you can support that charge.
This is the future, we're getting our tax information from YouTube. So, okay, well, with that, the 7 or 8 of you here, I hope this was interesting, so we'll be around for a little bit if you have other questions, but thank you. Let me thank our panel for coming down here and bearing their souls for their companies. You know, it's great to hear the company perspective, so please, let's thank them for joining us.